This recording is just an introduction to the March MixMax. It's not going to show you how to fully complete it, but really just how to get started. So as we look at what's given this time in March, we have, February's ending is March's beginning. And all the assets, liabilities, and stockholders' equity is listed. So it truly is a balance sheet, accounts. But over here, and again, it says it's post-closing, so after closing trial balance. So after closing trial balance, the only thing left are the balance sheet accounts, right? Because revenue and expenses have been closed. But over here, we have a pre-closing trial balance. So that's including, here we have all these expenses, and we have this revenue account, right? Here we have revenue, and then we've got, starting with cost of goods sold, all these expense accounts. So, in order to go through our step process, number one, we saw for the changes in the balance sheet, you've got changes in the balance sheet. You've got to figure out, well, what is the balance sheet? After closing, what's the balance sheet? And it also gives you some clues. Think about this question. It looks like retained earnings went down. Well, what would have caused that? So really getting started, the first thing really that we want to do is write out the financial statements. So the first financial statement, you're going to write out, as always, would be the income statement. And then if you polish that off, you got the statement of changes in retained earnings. And then finally, we write the balance sheet, correct? So let's focus on step number one. I'll let you do step 2 and 3 on your own. Just the retained earnings statement and the balance sheet. And once you've got that ending balance sheet, then you can do, okay, here's beginning, here's going to be your beginning balance sheet. And then once you get number 3, that'll be your ending balance sheet. Okay, so, here we have the income statement. So here's sales. Here's all our expense accounts. So, just set those up. Sales, subtract your cost of goods sold to get your gross profit. Subtract, the operating expenses to get operating income. Subtract, other expenses, which will be interest, to get income before taxes, and then subtract your income tax expense. So write that out. When you do that, it's going to look like this. So I just took those numbers, sales, less cost of goods sold to get our gross profit, the typical operating expenses, and again, this is what you've been seeing for February. If you look at February's income statement, this is what it looked like. So these 3 expenses for operating, get your operating income, subtract their non-operating expense, which is interest, subtract income tax expense, and the net income. And by the way, just another note, even though this is not operating, interest expense is not operating on the income statement, on the statement of cash flow, when we convert that to cash flow, it is considered an operating activity. So just an inconsistency there. Again, interest expense on the income statement is non-operating, but when we get to the statement of cash flow, when we convert an expense to a cash payment, it's an operating activity. So go through those. I think go through those. Finish out writing out your financial statements for the end of March, and when you do that, now you can go back and do all of the other, just like we've done before.